Okay, well, welcome everyone. My name is Brian Carmen. I am the Director of Marketing and Business Development here at the Indiana Bond Bank. And I just want to welcome you all to our webinar today on the Field Budgeting Program Overview and the 2022 cap-only structure, for which we are now accepting applications for most likely a late fall hedge. And if any of this terminology is not familiar to you, that's good, because we're hoping to bring more folks into our pool for this year, to our existing pool of great entities who have participated. And it just means that this program is new to you. So I do see quite a few names that I'm not familiar with. So I figured I would start really with just a quick introduction to the Indiana Bond Bank for those who are not familiar with us. And we are a quasi-governmental agency created in 1984 by Indiana legislation under the Treasurer of State's office. So the Honorable Treasurer Mitchell is the chair of our board and really oversees our operations and is a pivotal member of any strategic decisions that we make, and a huge resource for us and some of the services that we're able to provide. But I mentioned we're created by Indiana legislation for really two purposes. One, in the main part, to help units of government in Indiana attain more affordable financing options than what would otherwise be available. And the other part to that is defining what our customers, or who we're actually providing services to, are. And again, that's really what's called qualified entities or units of government. So anything from a library to a fire district, to a city's police department, to a county, to a state level entity, this is who we're providing services for. And I mention that only because we, like you, are governmental agencies. And so when we say that our vision is fostering community vitality, that's near and dear to our heart, much as it is to you. And we just happen to be on the financial spectrum of that. And you'll see our mission is to provide targeted financial solutions to Indiana local government. And on the left side of the screen, you'll see the variety of services that we offer. And we're really proud of this portfolio, because if you look at our name, two misleading things. One, we're not a bank, again, a governmental agency just like you. And then the word bond in there. Certainly we do offer bonds, but that's just one of the many things we do, from matchmaking for equipment leases to credit enhancements for units of government, to tax anticipation warrants through our advanced funding program. And then, of course, the field budgeting program, which you all are here to hear more about today. And I thought it might be helpful also to give a brief introduction to our larger internal team here at the Bond Bank. I am joined by our external partners as well today, who I will introduce in just a little bit throughout the presentation. But if you do come through the program for the fuel, or really any service, at some point you're going to meet all these folks. And so always better to put a face to a name and hear about what their role is with the agency. And really it starts at the top with our executive director, Mark Woolner, who is the leader of our organization. And in the 3 or 4 years that Mark's been here, you've probably seen a lot of changes and that have come about from continuous improvement efforts, whether it be an interest rate buy down program for equipment leases, where we save units of government up to 134 basis points on their equipment leases, or even just simple process improvements like a streamlined application that reduces on administrative costs and the time spent just getting into our programs. And so again, that starts with Mark. Marissa Weimer is our help program coordinator and office manager, really a vital part to keeping our organization running. I think aside from maybe me, probably the other person that our units of government are most in touch with, because usually with my role, I'm out talking to units of government, letting them know about our programs, and then Marissa is coordinating the application process and different communications. So Marissa has been a great addition to our team. And then we have Ron Mangus, who's our long-term vet at the Indiana Bond Bank, invaluable resource for experience and operational knowledge, not just to the bond bank itself, but the public finance industry in general. We lean on Ron for direction as far as all strategic initiatives, and he's a pivotal part in keeping us on the right track and helping us expand our horizons as well. Aaron Barnett, he's kind of on the back end of things, but if you've ever issued debt through the Indiana Bond Bank, you would be familiar with Aaron. He not only keeps the bond bank in compliance with federal regulations, but assists all units of government who have come through the bond bank at some point for financing in compliance as well, with really easy step-by-step instructions and clear communications to help you make sure that you're in compliance, whether it's continuing disclosure or even just understanding something with the fuel budgeting program, how the program is performing with you, giving monthly updates. And then I've already mentioned, I'm Brian Carmen, Director of Marketing and Business Development. Again, my role is to help spread awareness about our programs. We're referred to sometimes as, at the bond bank, as the best kept secret in Indiana government. But my role is to have us not be the best kept secret anymore and more of a known commodity. So that's why I'm here today, to help gain a better understanding of our fuel budgeting program specifically. And I'll start. There's a lot of ways to explain the fuel budgeting program, but before I even jump into that, I usually just like to give the why. What was the reason that we created this particular service, and what scenario does it add value to your unit of government? So start really with the problem, and this isn't going to be anything earth-shattering for many of you. I think it's going to be a familiar situation, whether you've been in there in the past or since January of 2021. But the reality is that we live in a world of volatility, and specific to the fuel market, an industry that's impacted by global events, local events, political decisions, anything that can really swing the market in one way or the other, whether that results in increased fuel prices or sinking fuel prices. And for the sake of this presentation, I'm not really going to focus on sinking fuel prices and events that lead to that. Of course, we've seen the pandemic lead it in both ways, where in 2020, prices went down, stayed steady there. And then, of course, in 2021, we've seen fuel prices rise quite back up. But the point is that these global events or local events, a Colonial Pipeline breach on the East Coast leads to increase in local fuel prices. And I have here your basic economic situation. As demand increases, supply decreases, the cost of fuel increases locally. Sure, this is a standard situation, but not always even the case. I mean, as with the Colonial Pipeline breach, if you're not familiar, demand didn't really necessarily increase there, but supply did. And the cost of fuel went up. We saw people filling up plastic bags full of gasoline. I mean, it was the toilet paper pandemic equivalent here in the fuel market. But all these things are out of our control. And when fuel prices rise, that hits you not only as an individual consumer, but for your role in local government, who manages a budget and the finances. You have essentially set a budget based on most likely historical consumption and prices during, whether it's last year or an average of 3 years, and projected that budget out. But as we all know, there's going to be instances where fuel prices go higher than even those averages will allow your flexibility in your budget to cover. And so when those prices do exceed that amount, you're left, well, basically with two things. You have to first report why the line item on your budget is higher now in expenses than what you had projected it to be. So bosses and councils and citizens of your territory, they love seeing that, of course not. But then also you have the actual cost of figuring out, okay, I didn't have this in the budget, so how do I actually pay for this? And whether that be going into your rainy day fund or borrowing from another department, not a great situation to be in. You're left essentially with a fuel budgeting headache. And I know for certain, based on conversations I've had with existing pool members, how much that can be of a concern and just a headache when we all work in government and we're stressed and strapped enough for resources. Not a great situation to be in. And so what is an ideal solution to this? Feeling at ease, knowing that you will not exceed your fuel budget expenses per year due to the rising costs in the fuel market. And essentially, what we offer, what we propose, and I'll get into how we do it, is you set your fuel budget just as you normally would. apply to our fuel budgeting program, and then receive this fuel budget protection throughout the year so that when fuel costs exceed a certain amount, you are not left with those additional costs. And so I think it'd be helpful here to really dive into maybe a basic overview of the fuel budgeting program. You would have seen on the first slide the variety of services and portfolio of tools that we have to help units of government. But I always say this, and I really mean it, the fuel budgeting program is our most unique and perhaps the most valuable in creating sustainability throughout a year as far as managing finances for units of government. And so we describe it as a financial risk management tool, which protects your budget against fuel price swings. But again, really focusing more on the rising fuel costs, because rising or sinking fuel costs are usually a good thing for everybody. And we'll talk about other structures where this doesn't exist, but for our particular program, we're talking about protection against rising fuel prices. And a financial risk management tool might sound familiar. It's essentially the equivalent to an insurance policy. And so I always like to give the example of if you get into a car accident and you're left with, and you don't have insurance, car insurance, and you're left with expenses for repairs, injuries, and really anything else that came along with it. If you have, and so maybe in order to cover those expenses, you again have to dive into your savings, not ideal. Borrow money from a family member or friend, again, not ideal. Or get out a personal loan to cover these expenses, definitely not ideal. Where if you have the car insurance, they will reimburse or even pay up front for those costs. And you have the security of knowing that that's in place and you're going to be set. And the fuel budgeting program really works in the same way. It's just a protection against your fuel budget so that when fuel prices rise above a certain amount, you will be protected on any costs above that amount based on the amount of gallons that you protected. And I've learned over the years that it's difficult to explain the fuel budgeting program in one sentence and get a fully encompassing idea of what it is. So don't worry, I have many examples and scenarios to show you later on, especially for more visually minded folks, that helps explain the program a little bit in more depth. But to continue on with just the overview, it's a program that we've offered since 2009. And since then, we've protected over 26.7 million gallons in fuel consumption for units of government. And I think it's important to note that this comes in both the form of diesel and gasoline as well. So we very well understand that each unit of government is very unique in their operational functions, but also in their fuel consumption. So we know that while one entity might have both diesel and gasoline consumption, some might have one or the other. None of that excludes you from the program. As long as you have consumption in one of these areas or both, then this would be a great program for you in that sense. And having run the program since 2009, it's really allowed the Indiana Bond Bank to develop an expansive network of professionals who assist us with this program, some of which are on this call here. But one of the benefits of coming into the program is that you have access to these professionals and experts in these different industries. And so whether it's setting a budget or projecting your fuel costs or projecting the future fuel market or even understanding the current market, or whether it's understanding the different approvals you need to enter into such a program, we really do have the best folks that we know to help you through that process or these different functions. And again, if you don't know them already, I'm excited for you to hear from them today, because hopefully you'll gain an understanding of the value that they add to not only the fuel budgeting program, but all of the bond bank programs as well. And then finally, on the overview of the program, one thing you may have heard if you are familiar with the bond bank is, as a state agency, we are able to pull different units of government together to obtain higher cost efficiencies. And essentially what that means is we can take a township, a school, a library, a county, police department, and we can enter them all into the same hedge to share administrative costs that individually would have to be incurred at the wholesale or at the full price, where as in this case, when it's a pool, it's shared. And I usually like to compare it to something like lawn care service for a neighborhood. So if you are individually reaching out to someone to come care for your lawn, you're paying for all the travel costs and time it takes for someone to actually get there, which honestly it can be more significant than you think as compared to maybe just actually cutting the lawn. But if you are entering into some agreement with your neighbors, or whether it's your homeowners association, the time traveled and the money it costs to actually get there is shared among 3 people instead of it being incurred individually. And that same concept works here. So we very much rely on the more the merrier, which means the more individual or units of government we have in the program, the higher the cost savings are for each individual entity. And just to reemphasize, because this is probably the question we get most throughout the webinar, and I should have mentioned this up front, if you have questions throughout, please drop them into either the question and answer section or the chat. Either one's fine. I'll periodically take breaks while our other speakers are presenting and check in on the questions. But so the most common question we get is, how does this affect our actual fuel delivery or the commodities that we're purchasing? And the simple answer is it doesn't. So this is a fuel budget protection tool. So it's just in regards to your fuel budget. We are not driving around in an IBB fuel tank delivering the physical commodity of fuel. So just anticipating that question will come up at some point. That is not what this program is. And so I've mentioned a couple of times the terminology cap only. And so you may have seen other programs, or even in the past, I've mentioned since 2009, it's allowed us to really develop the program and go through a variety of different structures to the program. And where we've landed, we feel really good, especially over the last 2 years and what we've seen, how we've seen this program be able to benefit units of government here in Indiana. But so that what we do essentially is we set a cap price on what fuel would be. And that lasts for a full year, and it's different based on gas and diesel, but you get a cap price either way. And then whenever the daily average cost of fuel within a given month exceeds that cap, you are reimbursed for those costs based on the amount of gallons that you hedged. And again, I'll cover that. But the point I want to emphasize is that we do not have a floor on this program where some other structures do. And when there is a floor structure and the prices sink to a low level below that floor, you're actually usually reimbursing, which is, for layman terms, say, an insurance agent for those costs that they essentially would have incurred there. But with this program, you're enjoying 100% of the sinking fuel prices. And that's something we feel really good about and important to units of government, that they can fully enjoy when costs of fuel is low. And then again, just going back to that cap, that's what we're really focused on, is when fuel prices rise, that you're protected. With this new cap-only program, it allowed us also to accept a one-time premium option. And this is something that came out of our continuous improvement efforts. We've heard over the years that monthly invoices are really not ideal, and honestly, they're not really ideal on our end either. So this just saves upfront time for or ongoing time for both the Indiana Bond Bank, our professionals, as well as your team, just having one less thing to do on a monthly basis. And finally, also something that stemmed out of our continuous improvement efforts is this streamlined application. You know, as technology evolves, it has allowed us to move away from pure Word documents, faxing, things like that, to what is now a basic Excel spreadsheet that has formulas intact, so that all you have to do is enter in your basic governmental information, address, and contact information, a couple of other things, and then essentially enter your fuel budget, which you've already got somewhere, so the gallons that you're projected to use, and then tell us how much of that you want to protect through this program. And I'll cover this later, but just to get it up front, we do allow units of government to protect 80% of their projected fuel use through this program. But that's something that you pick in your application and you tell us, and then before we actually enter into a hedge, we will confirm that that is the actual amount that you want to do. And let's see, I have next, I was going to introduce our first guest speaker, but I'm not 100% sure that he has been able to join us. Caitlin, are you still there? Is Adam with us now?
Yes, I'm still here. I don't think Adam has been able to dial in.
Okay.
So maybe we can hold off for now.
Yeah, so I will go ahead and skip Adam's part for now, and if he's able to join us later on, then he'll be able to tell us. I was hoping to dive into a little bit of what I actually mean by a hedge, because I know when I first started, I really had no idea what exactly we were talking about by that. Our team of professionals has helped me immensely to understand it better, but we'll come back to that maybe a little bit later on. But eventually where I wanted to go was giving you kind of an example of what this actually means at a cap level. And I'll preface by saying that each example that's given in this PowerPoint presentation is hypothetical, done basically on randomizations of a given market through Excel. So these are not actual numbers for what you see a calendar year here for, but certainly we would be happy to provide that. And actually Russ might do a little bit of that later too. But just to give you a basic idea of what this program looks like. So when we say enter a hedge, and Adam will hopefully explain that a little bit more, we set that cap price. And so in this instance, the red line is the cap price at $2. And so each month we will look at the average daily cost of fuel within a given month. And if it exceeds that $2 price, then we will take whatever gallons were protected and multiply it by the difference of that cap price and the actual price of fuel. And that is the money that gets reimbursed. And so you see in January through February, April through May, and then it looks like October through December, you see the actual cost of fuel, which is this blue on the graph, that it exceeded that $2 price. And so those are all months in which you would receive a reimbursement from the Indiana Bond Bank. And then in months like March and June and August and July, those are all months where it did not exceed it. And so you have basically just enjoyed the benefits of lower gas or lower cost of fuel. If you're not a graph person, and I'm assuming as budget managers, numbers are probably a better way to do this. So I've laid this out again as a hypothetical example of what it would look like in a given month where prices exceed the cap price that we have set, and what that could look like if you participate in our program versus what you didn't. And so I'm going to focus on this middle column here, but important to reference the left column as well of what this would look like. So in this particular instance, unit of government decided to go with the maximum of 80% protection on their projected fuel consumption. And so let's say that this is gasoline for just the sake of this example. So they projected to use 10,000 gallons of gasoline in this given month. And so they protected 8,000 with the Indiana Bond Bank. The assumed cap price, just like that chart showed before, is $2. And the actual price of gasoline on average in this given month was $2.70. If you take the difference between the actual and the cap price, you get a difference of 70 cents here. And so we take that 70 cents and we multiply it by the amount of gallons that you protected, which was in this case 8,000 gallons, and we get a number of $5,600. And so what does that mean? In this example, you're actually going to get a reimbursement from the bond bank for that $5,600 amount. That's your net savings, essentially. We don't always like to call it as savings, but because it's an insurance policy, but that is essentially what your reimbursement would be. Whereas if you weren't protected, you would have paid $27,000 in gasoline consumption for this month, and but with the program, the protection, you're only paying $21,400. So that is really kind of the core examples of the program. And I can tell you from January to now, we have seen that cap price exceeded in each of these months. So we've seen the benefit of the program. And again, with no floor, you just have to focus on when the market is heading up. But you don't even really have to focus on that, because that's the point of the program. It's, again, if you saw our flyer, it's the set it and forget it mentality. And that's how we achieve that goal. And so with that overview of the program, I want to now welcome in our other guests, and these are they're external to the bond bank, but we really think of them as part of our entity. And this is some of those partnerships that I mentioned earlier that we've developed, really experts in the field. We have John and Russ from Maverick Energy, who I'm guessing most of you know, or some of you know, if you participated in any natural gas program or a bond bank fuel budgeting program. And then a lot of you would know Dennis Otten from Bose McKinney and Evans as well, who's been our go-to for assisting you with getting through your local processes as well for years. And I really mean this when I say experts. When I joined the Indiana Bond Bank back in 2018, this was really the hardest program for me to wrap my hands around. And without their assistance, I'm not sure I would have ever gotten there. So I'll turn it over first to Maverick, and we'll come back and I'll introduce Dennis as well. But I think for this presentation, Russ, it's just going to be you. John's not going to be joining us today. Is that correct?
That's correct.
All right. Well, with that, then, Russ, I'll let you take it from here.
All right. So this is the part where we, I guess it kind of supports another category of the why we have this program in the first place, and that is to try to figure out what's happening with energy markets, crude oil, diesel, unleaded, extremely volatile, as we all know. And we try to just focus in on understanding the types of things that may be impacting price. But before I kind of get into that stuff, I'd like to just more or less explain to you, or try to visually explain to you, that there are benefits to the bond bank program, whether the market goes up or down. So Brian, if you can switch to the next slide for me. So two great examples of the CAP program, the CAP only program, really have been plain as day over the last 2 years. 2020 and 2021 to date have given us the best examples of how this program works. First and foremost, in 2020, just to give you an idea, so this program works in the best of times and the worst of times. For example, in 2020, we had a CAP program, which is the same as a budget price, set at right around $2.40 a gallon. As you can see by this graph, the green line shows what the average market price was during the pandemic, all the way down in April of 2020, down to 90 cents a gallon on the prompt month. So what's important about this is that, yes, you have this budget certainty sitting at, roughly $2.40 a gallon, but when the market collapsed, you were the beneficiary of all that low price fuel. So in essence, the program provides you with an absolute can't lose scenario, because you either are going to save versus the budget, or in 2021 scenario, you're going to save versus the market. So Brian, would you go to the next one? So this is what this year looks like. In year to date, we've projected this out looking at the forward curve, price curve through the end of 2021 through December. So actual results through June, so first half of the year, and looking out for the rest of the year, we're anticipating roughly about a 50 cent per gallon savings versus market, because now the green line in this instance is the actual CAP budget price. Your actual price for participating in the program is capped. So anytime the market exceeds those numbers, you're going to get a reimbursement check from the bond bank to offset whatever you're paying in the open market. So you're guaranteeing yourself this green budget line regardless. So markets volatile up or volatile down, there is benefit to any entity that is managing a year-to-year budget. So the value there is, again, it's the volatility that we're stripping out of it for you, or you're stripping it out for yourself. I mean, as far as, to be able to set that budget, live with it, gain the peace of mind and the flexibility to participate in the market when it's going lower. Brian, if you would, next slide. So again, it seems like we're there's always something going on in these commodity markets. And 99% of what's happening with commodity prices are outside of the end user's control. You know, you're sitting in the Midwest, central Indiana, and things that are happening in Russia, Iran, you know, anywhere in the world are impacting what's happening with your prices here in the Midwest. So the theory here is that to be, you know, the ultimate good steward of taxpayer money is to put some protection in place. And we're putting protection in place to offset some of these things that are happening in the marketplace, such as, you know, just looking at here, you've got OPEC, which is increasing, you know, output right now, which is good because they've had output decreased for the last 2-3 years, but the U.S. is decreasing output. So again, we're becoming more dependent upon foreign oil sources than we were over the last few years. These things are constantly moving and changing, and that's somewhat supported by green energy initiatives and some other things that are administratively, again, things that are outside of our control here in the Midwest. So you've got fundamental pressure that's impacting prices. You've got pandemic pressures that are still hitting the market. For example, you know, the COVID recovery of 2021 has certainly shown how prices could go up very, very rapidly. But there's plenty of chatter out there right now about a pandemic coming back, right? And shutdowns coming back and demand being, you know, restricted again. If those things happen, we're probably going to see another decrease in price similar to what we saw in 2020. So again, having the best of both worlds, I think, is an important part of how you manage your business moving forward. And again, fuel is just one small piece of what you're doing, but it certainly is one box that you can check to create some stability. Some other things that are impacting pricing right now that are very, very important are hedge funds, investment money that is flowing into the market. Right now, the hedge funds are sitting with a net position of 7-to-1 long to short ratios. This is basically all these when we talk about long positions, we're talking about investors coming in and buying positions. All that buying, just like is in stocks, is taking the market higher. What's important about that is if any news comes out, those long positions could very quickly become selling positions, and you get a flood of participants selling in the marketplace. So those types of things can create the volatility. We are anticipating, and from right now with the way this year is shaping up, with the things that OPEC are doing right now, we do believe the market is near-term overbought. We're anticipating that over the next 90 days or so is going to be an ideal buying opportunity as we look into 2022. So that's why we're setting this up now to put the hedge and get this budget program in place a little bit earlier this year than we have in the past, just because the market conditions are a little bit better. And again, I mean, we're still talking about inflation as a risk. Economic recovery is still a risk. Not just there in the US, but globally. The global demand for energy products is still there. And one other key statistic, you know, so some people say, well, we got all these electric vehicles that are coming. We got all these things that are happening that, you know, should keep a lid on demand. Well, not really. I mean, because if you look at best case projections in the electric vehicle marketplace, is that by the year 2030, and this is by best estimates, you're still going to have 92% of all vehicles on the road be combustion engines, still requiring oil-based products to move trucks, buses, trains, planes, you name it. So it's not going away. The world's getting bigger. So all of these things are still going to be impacting price as we look forward. But as of right now, we're targeting, you know, the next 90 days is the best opportunity for 2022. Brian, you could switch. And just to give you an idea of where, you know, we see pricing right now for diesel and unleaded into 2022. Again, these things change second by second, minute by minute, based upon what's happening in the commodities markets. This is taking a look at calendar year 22. Diesel cap right now is right around $2.43. Unleaded cap right now is around $2.35. There's a timeline horizon that's built into these prices. So the closer we get to 2022, what I'll call the fear premium or the unknown premium for these cap prices will start to shrink based upon less and less time we get closer and closer to 2022. So again, the sweet spot that we're looking for is market to be, at one of its lowest points as we approach 2022, and then also get a little bit closer to 2022 to shrink out this this premium on these cap prices. But all in all, I mean, this is where you'd be looking to set your budget for 2022 at this 243 or 235. That's the purpose of it. And then anything that happens outside of that, you're protected. Brian. So again, the cost of the program, I mean, I'll let Brian speak to that, as far as the premiums go, but basically last year it was 15 cents per gallon to participate in the program. So we always say, what do you get for a nickel and a dime, right? This slide looks pretty much to be exactly the same as last year for the most part. And much of this has come to become, I guess, really just more emphasized than we were a year ago, except now I think we have the added concern of whether or not we're going to have a resurgence of COVID and whether or not we're going to have an potential economic downturn, and what kind of volatility does that create. But ultimately what we're trying to do is gain control of, give you a tool that allows you to gain control of your budget line item, eliminate the risk associated with energy commodities globally that could impact what's happening here. And again, it's about managing risk, creating stability in your budget, and ultimately, this program is the most efficient way to do that. From a cost perspective and a flexibility standpoint, this is really the only way, in my opinion, the best way to manage fuel price risk from year to year.
Yeah, thank you so much, Russ, and I appreciate you kind of giving the other end of it too, just how to win all, whether you're exceeding the cap or not. I mean, like, I think you made that pretty clear, which even from my end, I probably should express a little bit more, because it really is a win-win regardless of where you're at, coming below on that market value and your budget, and just having that confidence there. And I want to take a moment before I bring Dennis in, now that we kind of have some market background and what we might expect for next year, but just really how to get involved in the program. And so I mentioned we've already opened up applications. We kind of started with our previous pool. I couldn't see how many folks were on here from our last year's pool, but I know Russ or I've spoken with each one of them who's coming back for the next year. And I think that's, if anything's indicative of a healthy, well-run program, it's whether people come back and use it. And so certainly very happy to have those conversations with our previous and know that first, the program has been super beneficial to them. And for those who've participated for years and years, that it's only getting better through, again, process improvements or just even structural redesigns. But so there is an application process, and it's fairly straightforward, but probably when we bring Dennis in, he'll tell you a little bit more about the local approval side. I'll speak more to the application. So as I said already, we've had applications open since June 21st. And now we're just holding this informational webinar really for the new prospective participants to come into the program. With the due date of August 20th, I'll say just straight up that that's a flexible date for us, especially for new folks coming into the program. And the reason for that is after you view today's webinar, I'm certain there's probably going to be a request for just kind of a more informal conversation on participation in the program and things like that. And whether it's Russ, John, or myself, or even Dennis, I know that we would love to have those conversations. And so if that ends up extending that application deadline, is really not a big deal, because we've set ourselves up for flexibility within. But also just the first time seeing the application, again, it really shouldn't be, it should be pretty intuitive. It's, again, just an Excel spreadsheet. We've already locked cells with formulas to do everything that we needed to do from our end to do a review. And so it's really as simple as going in and plugging in the numbers and just your basic information for your entity. But so we do have that tentative date of August 20th for the actual application date. I know I'm already scheduled to go out to assist one entity with the application. It's a brand new business manager at a school district, and I offer that up to anyone. So more than happy if you are not 100% sure you're filling it out correctly, please just reach out to me directly. And whether it's via virtual or in person, always happy to go out. Love visiting communities that we serve, especially, but I wanted to make sure I mentioned that. And Dennis is going to talk about not the application side, but what needs to be done at the local level just to get approval for the actual program participation itself. But so we've got some tentative dates in there as well. Again, just dependent on how things are going, whether if we anticipate a much larger head, then we're probably going to bump these dates out just to make sure everyone can get in. But that's really not going to affect pricing or anything like any of the factors that Russ mentioned during his part of the presentation. The goal is for everyone to be benefited by any extensions or anything like that on these dates. It's never going to be sooner than that, so know that this is the bare minimum for submission, but flexibility to move further out. So Dennis will talk a little bit about the ordinances and the closing documents. But then I guess probably, I mentioned this actually has a late summer date for when we actually enter into the hedge. So I mentioned fall. I think that's probably somewhat reasonable. Late summer, early fall is when we would actually enter in. And so you would have your fuel budget locked then for the next calendar year. Believe that next up is Dennis, who will be presenting before he heads out to the Bahamas, and very grateful that he scheduled his trip around this so that he can tell us a little bit more about the local side of things. So,
all right. Thanks, Brian, and everyone that's listening in. I'm with Bose McKinney & Evans, and we've worked with the Bond Bank for many, many years. And we've been, we'll call it the Qualified Entity Council for the fuel program since its inception. And I can't remember, Brian, when the first year was that this program was started by the Bond Bank. I want to say it was 2007 or 2008. But I remember when the program started, we were in the midst of a summer where fuel prices were really kind of going through the roof for some of the factors that Russ mentioned earlier. I remember at the time, like, people were talking about working from home, which back then just seemed a complete oddity, but it was not because it was convenient, but because it was expensive to drive to work with the way the fuel prices were going. And it was really impacting local governments' budgets. And so out of that, a positive outgrowth out of that was this process that Brian and Russ have been talking about, the fuel budgeting program. And Brian, can you go to the next slide? So Brian sort of mentioned to you, how this program works, and Russ has sort of talked to you about how the fuel prices fluctuate. I'm going to talk to you somewhat about how do we paper up your participation in this program, whether you're a school corporation, a city, a town, or a county, or another governmental entity. We've got this very streamlined, and we try to make this as simple as we can and help you through the process. But effectively, Brian mentioned to you filling out the application, which can be done online now. Once the bond bank receives an application from an entity, so I'm going to just say, for example, here, a school corporation, they'll send over that application to me, and then I will use the information in that application to prepare a resolution for the governing body. So in the case of a school, that's the school board of trustees. And what that resolution does is it effectively says that the entity intends to participate in the fuel program for, let's say in this case, 2022. It authorizes the approval of the form of an agreement, and this agreement's really the contract that obligates the bond bank to make payments to you if the price falls up or goes above the cap price. So this is the contract that you have that you will sign to participate in the program. And then it authorizes the various officers of the entity to execute the agreement and certain closing certificates that we'll have. So we'll put that resolution together and we'll coordinate with your legal counsel, or sometimes it's a school business manager or controller or court treasurer on the next meeting date to get that resolution approved. And since it's a resolution, it can be done at one meeting. I know certain cities and towns have 2 meeting requirements if it's an ordinance, unless they suspend the rule. So typically these can be done at one meeting. And we'll ask for the resolution back. Brian, can you go to the next slide? And so we'll get the resolution back, and I've got on here no public hearings are required, so this can just be added to your agenda as a regular item. And Brian, I think you had mentioned that you were actually going to a school corporation to meet with someone to help out with the application. And I would just echo that we like to make ourselves available as well. So sometimes there are questions that come up, particularly with new participants, and their local councils oftentimes will have questions for us on the documents, and we're more than happy to answer those, and even go to meetings as well and present the resolutions to the governing body. So if there's ever a need for that, we make ourselves available for it. And so as you're doing this process, we're also sending these resolutions out to all of the other applicants as they come in. And typically, I like to say it's sort of like in 1 week, we have a flurry of these resolutions going out, and we try to keep everyone on pretty much the same time frame. And Brian had a few slides back shown a window of time for approval of the resolutions and ordinances, and we try to stick with that. And like he said, with the application deadline, they can slip a little bit. They do. We can't always control whether someone's got a quorum for a meeting or if there's weather or other events, but we're always able to work around that. That's not been an issue. But once we get all of the resolutions back and we have our group of participants together, at that point, we'll coordinate with the bond bank on, really what we'll call a closing date. And that's the time when the prices be locked in and confirmed by the participating entities. And Brian or Russ, remind me, I think normally when we get to that point, you send out a form to the entities to sign that basically is a confirmation that they will participate in the amount of gallons that they'll hedge. And I think we have a window, kind of a parameter on what the pricing is. Is that right, Brian?
Yes, that is absolutely correct. And that serves 2 purposes. The application itself is non-committal. I mean, we certainly hope, because we start to build the pool, and so we hope that everything kind of stays stable. But submitting an application doesn't commit you to whatever you put in the application. Oftentimes, that final confirm that we send out, it mimics the application, and based on the pricing, what we usually see is people who were initially thinking maybe they had hedged 60%. They're like, okay, well, this actually makes more sense for us to do 80% at this time. So usually we see the numbers go up at that point. But yes, you're 100% correct. So there's always time to do a revision closer to the end of the process.
And when that goes out, I would say we will send out some certificates to you. Basically, we call it a general certificate and a certificate for your local council to sign, to basically certify you complied with open door law requirements, you haven't rescinded your resolution, and that the folks signing the agreement with the bond bank are authorized to sign. So we'll get all those documents back, and I'll tell you, we do this all by email now. So it's a pretty streamlined process. Once we get those documents back and we have them from all of the participants and the closing occurs, we put them in a transcript. So if you've worked on bond issues at all before, and this is nothing like a bond issue in terms of paperwork, but in terms of having some transcript of documents, we get those out to each of the participants after closing. And we also send those to the bond bank because they need to get those to the swap counterparty because they'll rely on those. And as a practical matter, all of the documents that the entities participating in are signing are pretty much the same, and that this sort of provides certainty to all the parties involved that one entity is not being treated different than the other. The only real difference being the particular amount of gallons that you might be hedging under the transaction. and if you're going to be receiving payments, where those go. So Brian, could you go to the next slide? So just a couple of frequently asked questions, and I think we've covered a lot of these, Brian and Russ have, but if you participate in the program, where would you purchase your fuel? Participation in the program doesn't affect at all where you purchase fuel. You'll continue to buy from the vendors that you buy or you choose to buy from. This is really an opportunity just to cap the price of what you're paying. So it's really fuel at budgeting insurance. And again, what are the advantages? It's like an insurance program for your budget. This provides certainty in the amount that you're going to be paying for fuel throughout the year. So I like to think of it as you're doing your budget each year. The fuel is the one variable that you can take out of the equation. But like Russ mentioned, the nice thing about it now is you're going to enjoy the benefits of if the fuel costs go below what that cap is. You'll be the benefactor of that, but you'll have a fixed price in terms of the cap of what they can be at. And the bond bank's not going to audit your fuel consumption. The gallons consumed or gallons hedged will be based upon the actual contract that you agree with the bond bank on. And as Brian mentioned, that goes into that final confirmation sheet you'll sign right before the price is locked in. And I think the only really restriction on this is if you fixed your fuel price already for 100% of the year, then you wouldn't be eligible to participate because you'll have already locked that in. But otherwise, you're eligible to participate, and it's worked out really well over the years. And I think we've got a really streamlined process here, and we try to make it as simple as possible. I can say this, we have a lot of participants that are doing this year in and year out, and it's just kind of old hat now. They know exactly what to do, and we know when and where to send them documents. And for the new participants, I think once they go through it one time, they'll feel the same way.
Yeah, thank you, Dennis, and kudos to you, because I think before we got on this call, I sent over the slide numbers, and you picked up Ron's slide. Ron, our long-term vet here, who usually does this, and I think you gave him a run for his money on this one. So,
Thanks.
But yeah, I again to our external partners and speakers for this. I think we could have done this webinar with just a bit of general overview of the program, but I think it's important to have Russ and Dennis here to really kind of put at ease. They talked about a lot of things that go into the program, but this is all on the back end, and they're here so that you don't have to worry about those things, but to offer guidance and advise when curious. But certainly they're here so that you can really not have to worry about a lot of those variables or things, and to be walked through the process if needed. But so thank you so much. Yeah, go ahead, Russ.
I just add one more thing, kind of piggyback on what Dennis was saying about fixing a price with a vendor. Because some of you may have done that in the past, where you've got your local jobber and they'll offer you a fixed price. One of the benefits of the bond bank fuel budgeting program, this is a critical piece, in that if you do a fixed price contract with a vendor, it has a volumetric requirement in it. It's take or pay. If something happens, if you buy a fixed price contract through your local jobber or vendor, and the market, say in 2020, when we had the pandemic, and you couldn't use that fuel anymore, you still have to buy that fuel. If you have no place to put it, then they're going to say, well, then you're going to have to sell it back in the open market. With the cap only program, the only thing that you're out is the premium associated with the insurance. If you use less, you don't pay for it. So it's a critical piece of value that you get through the fuel budgeting program that you can't get from just doing a straight fixed price contract. So I really want to stress that, because it's a huge piece or component of the flexibility that you gain for all that down. If the market was to reverse, right, you don't get any of that downward participation if you do a fixed price contract with somebody. But if you just have this cap structure, you get 100% of that downward participation. So there's nuances to it, and you almost have to map it out so you can see what the dollars look like. But it's a huge piece of the success of the program in this cap only structure.
Yeah, thank you for that point of clarification. I know that's come up in the past too. And certainly if you have questions, if you are fixing your 100% of your fuel price, please reach out. We're more than happy to have that individual conversation as far as what Russ just mentioned, because it's a pivotal part of the program and component to how we might be able to help folks in that situation as well. And let's see, I think we're approaching the end of really our time here. I don't want to hold anyone over, so I'll quickly mention what next steps will be. So I'm actually going to send out to attendees just a brief survey with your name and whether you're interested in the program. If you don't mind filling that out so that we can keep you kind of in the loop, get you an application and things like that. And in addition, there's an email address here, fuel@inbondbank.com. I ask if you are just interested in continuing the conversation to send an email there. Again, as I mentioned, I'm almost 100% sure there's going to be more questions that come out of this, or if you want a one-on-one consult with a member of the Bond Bank team, or Dennis or Russ or John from Mavic Energy, those are the conversations that we would really like to have with you, just to do any clarification or look at your situation specifically and how this program might be able to benefit you. But that would be the next step in the process, one way or the other. So be on the lookout for an email. It'll come from this fuel address. If you don't have it, really by the end of today, early tomorrow, my contact information is here on the next slide. And then really the immediate team members are here as well. And we'll see if we can get maybe something from Adam recorded to attach, but I got a question in the bank about whether we'll be providing the slides out, and the answer is yes. We'll be posting them to our website. May even do a follow-up webinar in the near future, recognizing that there's some school corporations on summer break, and well, it's just vacation time for a lot of people in general. So I just want to thank our guests one more time, just to show appreciation for how much we value and your contribution to the program. And then, of course, thank you all for joining us today for this webinar. I hope it was informational. Fuel budgeting program is absolutely, again, one of our most unique. And so it requires continued conversations. That's what we're here for. And I hope everybody has a great day and enjoys a very nice summer day out there. So thanks again to everybody, and we'll talk soon.
Thank you.
Thanks all.